Hi, let's cover my Elliott Wave scenarios on Bitcoin on the daily 4-hour, 1-hour, and the 15-minute time frame. But I like to start this video where I left off yesterday. Yesterday, when I recorded, price was down here. And I explained that if we're looking for an impulse to the downside, we want to see a 1, 2, 3, 4, and a wave 5. Of course, the moment price is forming wave 4s, we always have to be aware of the potential of ABCs. And in the video yesterday, I highlighted at least the potential of larger WXY structures if you get a 3-wave move to the downside here. Now, what does that mean? It basically means that if you do not get a 5-wave structure down, in other words, wave 4 is touching the 618, probabilities increase to take out this high and as a bare minimum continues the range. Reason being that probabilities are higher. This is a 3 compared to it being a 5, as you don't want wave 4 to touch the 0.618 that you pull from wave 2 to the low of your wave 3. So the moment price moved up, touched the 0.618, it immediately changes the probabilities and the directional bias. You're looking for price to take out this high and as a minimum continue this range for a longer period of time, and then we'll be able to figure out at a later stage what is going on. Now, if I then shortly move to Discord, then price here moved towards the upside. And as price is moving to the upside, you can use my trend and turn methodology, right? We have a bit of ranging and overlapping structures in the beginning. We get a push towards the upside here on increasing volume as well. And what we are then looking for is for price to slow down. Now then, a little bit later here on the 5-minute time frame, we can see that price is still volume increasing, but we can slowly see price is curving and it is starting to slow down. And that is important because the moment you see this, the bias is slowly changing to a move to the upside finishing and ranges to start or retracements to start. So the directional bias is changing from upside slowly to downside. And of course, it becomes interesting to then also keep an eye on the areas of resistance, like the value area here at 113.9K. Now then I move down shortly. I explain here that if we are bullish and we're looking for an impulse, we like to still see a couple of ranges, preferably of similar size. So we have some 1-2s, we eventually get 3 up. Preferably you see some wave 4s and wave 5s. However, again here we do note that this is going on the 5-minute time frame. So in other words, once you are looking for wave 4s and 5s, you at least expect a range to form. When you see this, you at least expect a retracement to form a range for potential wave 4. Or if this, once again, is a corrective structure, you're looking for bigger retracements and price moving down again. It just goes down as fast as it moves towards the upside. But the directional bias is the same. You're either looking for a more like ranging structure in the 4 or you get a bigger retracement. But the moment you see this, when someone is in a long position and you see this, well, it's probably a relatively good idea to at least take something off or consider maybe just exiting the position, maybe turn around and look for positions in the other direction. Also, when price was touching the value area high, you can see that volume moved down nicely. So price continued up into the value area and then volume moved down. And that is also what we like to see when we consider the trend and turn methodology. So here on a 5-minute time frame on the live chart, you can see we have here the overlapping structures. You get the push up on increasing volume and here price is slowing down. Now, the moment price is slowing down, you don't necessarily really know what's going on. Are you going to get a wave 4 and then a 5 up? Or is this the end? And are you going to look for a larger retracement? But the good thing is, it doesn't matter because the directional bias is exactly the same. You're looking for a retracement to the downside. And then based on the price action, you'll figure out what's going on. Now, we identified yesterday this move to the downside as a 5-wave structure, as most of the people in Discord did as well, a 5-wave move down. So therefore, you're always looking for a 3 up and preferably at least another 5 to the downside. Now, price then also touched of course, the value area high over here, 113.9K, which is, by the way, taken from this range here. So you can take a volume profile from this range and that is your value area high, right? So that is where the level comes from on the chart. So that explains how probabilities shifted as price moved up, touched the 618. Probabilities or directional bias is turning bullish, looking for price to take the high or minimum, continue a larger sideways range. Price continues pushing, then eventually it starts to slow down, which means that if we're looking for an impulse, we look for another 4 and a 5, 1, 2s, 3, couple of 4, 5s. Now you can take a Fibonacci. Minimum target for wave 4 is generally the 0.236 Fibonacci. So that would be 112.6, but the common target area goes much deeper, 111.7, 110, well, pretty much 111 here. So, price for a wave 4 can definitely retrace, and the wave 4 preferably takes a little bit of time, similar in size compared to the 2s. So the directional bias up here as price is slowing down is downside, and then depending on the move down, you're looking for either a wave 4 corrective structure, and then a 5 up, which means that if potential shorts are taken over here at the value area while price is slowing down, you can always close at a later stage in a little bit of profit or break even, but you have the benefit of time as the structure is forming. You'll be able to analyze the structure. And if you get a motive wave to the downside, well, then perfect. You just look for price to continue down and there's more profit in your bag. So that is the local price action that happened after the video of yesterday in a nutshell. And now we're going to zoom out and go to a daily time frame. So the bullish scenario here doesn't change. We still have the flat for the bulls in a wave A, B, and then a wave C to the downside. Common target for wave C is this blue area between the low of your A and the 1.618 on the chart at 95.5K. Now if you then have a look at this wave C to the downside, which should be an impulse or a diagonal, but in this case an impulse, you can see that preferably on a Coinbase chart and most of the crypto exchange charts, you would count another low in a 5 instead of a single 1, 2, 3, 4 and a wave 5, because this range counted as a single wave 2 is very tricky. It's not high probabilities as explained in previous content where I deep dived into this particular range. Probabilities would be lower. This is a single corrective structure. It is better counted as a like multiple structures in one range. So at least a double 1, 2 would therefore then be an option. So you have a 1, 2, 1, 2, you get your 3, 4, 5, and then another 4 and another 5. Now the target for this wave 4 here being the blue box, 236, of course, touched as well, therefore removed because price moved to the 05. So arguably I can remove the 382 as well. But this is your target area still for 4, invalidation 116, not touched. The 0.5 is nicely respected. And these fibs here are taken from the end of wave 2 to the end of wave 3. So here you preferably then have your 1, 2, 1, 2, 3, 4, 5, 4, and get another 5 to the downside. 1, 2, 3, 4, a 5-wave structure. Finish wave 5 around this blue box preferably, as we have some nice little bits of support here between like 96 and 102. Of course, down here at the lower 90 area, we still have some support as well. If you lose this, it's a little bit problematic, as then your wave 5 is really going to go quite deep. That is not what we like to see, because once price is moving into wave 4s and 5s, you preferably start to curve, create a bit of a rounded bottom, and then go back up, instead of price doing this and then go down. Preferably it doesn't. Preferably you get that sharp move down, and then slowly price is going to curve and form a couple of wave 4s and 5s. So you have your 1, 2s, your 3, 4, 5s, and then price turns around. But preferably you do make another low, and wave 5 should be a 5-wave structure. Most commonly it is an impulse, being a 1, 2, 3, 4, 5-wave move. When 5 is finished, you then look for price to move back towards the upside, and a minimum retracement target would then generally be the 0.382, which if price would go to the top of the box, then the 382 sits at 111.7, to the lower end of the box here, 107.8. And if you go to the daily naked point of controls below, it's at least 106. So it just depends on how low price goes. Now, as mentioned, wave 5 is preferably a impulsive structure. And generally, you get a 5-wave structure, of course, so you get a bit of 1, 2s, you then get your 3, then a couple of 4, 5s. When price is slowing down on decreasing volume, we look for price to turn around. This is my trend and turn methodology. We're developing a free PDF on lots of different tips and tricks that you can use to simplify reading the chart. That is coming later this year when the book is coming out. I also like to highlight that a 5-wave structure to the downside here is something that would be possible here for the bulls as well, because then you're looking for a wave C finished. You preferably look for a larger move back to the upside or a continuation of the bull market. But be aware that in a bearish scenario, you can now count a move to the downside. Let me just remove that for a second. 1, 2, 3, 4, 5. Correction, 1, 2, 3, 4, 5, correction down. This would be a multi-1-2. It is, however, lower probabilities. Right, so this is higher degree 1 and 2. This is lower degree 1, 2. Invalidation is then taking the high once you take the low in a 5-wave structure. Now, the reason why the probabilities for the bears are at the moment lower is because in a bearish scenario, you have to count this range as a single 2, or you have to allow for truncations, because if this is your low and you end 1, 2, 3, 4, 5, then this is a single 2 with a single 4. Okay, that's fine, but we don't like counting a single 2 here. If this is counted as a multi-1-2 and this is 3, you now need to allow for truncations, because now you need to count 1, 2, 1, 2, or sorry, 1, 2, 1, 2, 3, 4, 5, 4, 5. Truncation. Mind you that truncations are incredibly rare. So those are not preferred till proven otherwise. And proven otherwise will take a little bit of time. Proven otherwise basically means price just moves to the downside further in a bearish case, instead of getting another like 5, like boom, like this would be proven otherwise. 5 down, 3 up, and then continuation to the downside. That would be proven otherwise. Another way to say proven otherwise would be that this locally is a bullish expanding diagonal. That's a 1, 2, and you look for price to move up. Not highest probabilities, because expanding structures never are, but that would be the proven otherwise type of scenarios. So they're not preferred. So at the moment, as we like to avoid truncations, on a chart like this, the exchange charts, you preferably create another low. On the CME chart, you can end something at this low because you don't have the long wick. So therefore, you don't have to count truncations on this chart. And this is the problem with still the recent price action having that long wick, like last week with the move to the downside. It just creates a little bit of like it creates a difference between the charts. So therefore, I also keep a little side eye here on CME. And here you can count a double 1, 2. If you count a double 1, 2 here with a double 4, 5, and this is your latest 5, you can end at the low on the CME chart. But on a Coinbase chart, if we want to end something there, then we either need to allow for truncations, very rare, or this is a single 2. It just doesn't look nice as a single wave 2. Also here on the chart here, we can still, of course, get a triple and another 4 and a 5. This wave 4 in CME is also not invalidated. So I keep an eye on both of these charts, but still mainly Coinbase, and preferably we still see another low, even in the bullish scenario. Now, in the bearish scenario, the bearish being a top is in, and you're looking for A, B, C, or bear market 1, 2, 3. Because price yesterday moved towards the upside here and created another high, the 0.382 retracement from the high to the low is touched. Minimum target for a retracement, like for example a wave 2 or a wave B. And also this high was made after the 382 fib time, taken from the start to the end of your wave 1 or of course your wave A. Therefore, the minimum targets for a retracement in a wave 2 or B are hit with this move to the upside. So therefore, in theory, you can end a wave 2 or B at that particular high. And if price gets a 5-wave structure down, 1, 2, 3, 4, 5-wave move, then in a bullish scenario, this is a wave 5. In a bearish scenario, this is a lower degree wave 1. You get a move up and then price falls. The retracement to the upside after the 5-wave move is going to be important. So once that price action comes, we'll be able to identify it. Preferably though, even in a bearish case, you still get another like 1, 2, 3, 4, 5 correction, and only later than your continuation instead of a straight waterfall. Similar to what you had over here, you get that first leg down, you get a move up, you get another leg down, another, and then eventually you go. The more 1-2s you build, the more violent your 3 is. At the moment, we have one move here to the downside. If price can create a 1, a 2, a 3, 4, 5, create another lower degree 1, so you have a 1, a 2, a 1, a 2, and then eventually you get a larger move in a bearish scenario. At least we have to be aware, and that's what's important. Bearish scenario doesn't have the highest probabilities at the moment because we need a single 2 or allow for truncations. We don't like to do that, but we are aware. If price moves to the downside in a 3-wave structure, 5, 3, 5, moves to the downside to at least 104.5, and then moves up, we have to consider flats in A, B, C. That's bearish, because after wave C, you look for another leg towards the downside. The leg towards the downside does not mean bear market. When I talk about bearish, I talk about the bias is going to be for another move down. The bulls are then going to look for W, X, and another leg down is going to be a Y. So there's always going to be a bullish scenario, but it's up to us to identify what we're dealing with here. And at the moment, we don't have enough information to support the narrative of a bear market and very bearish outcome. Also mainly just because of the move down, either single 2 or truncations, we don't like that. But at least we are aware, we are prepared, we know what we're looking for and dealing with, and how probabilities change as new information comes in, which is something I like to explain in this type of content as well, right? Is it 3 down? Is it 5 down? If it's 5 down, little retracement continuation or larger retracement, like, you know, that's how probabilities change. Of course, in a bullish scenario, after your 5, you preferably get motive waves towards the upside. So 1, 2, 3, 4, 5, correction, eventually continue towards the upside, multi 1-2s, and then a larger 3, or you get a leading diagonal, lowest probabilities, but then also continue up. Okay, then we get to the 1-hour time frame, the messy time frame. And I already spoke about the 1 hour a little bit earlier. But just like when we consider counts here, without going in too much detail, because holy moly, is this move to the upside here messy, for example. So, you know, this is now higher probability corrective. So when we consider a few scenarios, either looking for a WXY that is finished here at the high, and then look for 5 down, 3 up, 5 down, at least. And then possibly, of course, take out the low. We have a larger WXY. So in that case, this high here is a wave B. So it's part of a flat in a wave A, a wave B. We get a wave C, and then eventually another leg towards the upside to create a larger range, W, X, and then a wave Y. This white line, if price is not taking out this white line, you got to consider a running flat. That is rare. Preferably you get an expanded flat where price actually moves below the low over here at a 107.4K. That is a more common structure to finish than an impulse. Couple of 1-2s, 3, couple of 4-5s, grab the low, touch support, get a move up, and then either create a triangle flat or a zigzag, because you can still have a double zigzag here, but I don't prefer to see a double zigzag. As long as price is not touching the 0.7, there's still probabilities for a W, X, and then a wave Y. The issue is that if you move above this high, you're going to get close, for the bulls, you're going to get close to this level, the 0.618, which invalidates wave 4. And preferably bulls do not invalidate that wave 4 at the moment, because preferably bulls look for a multi 1-2 and still a wave 5. Plus, it is at the moment very difficult to count this move to the upside as anything high probability motive. If you create a low, then bulls want to see impulsive structures to the upside, motive wave structures, so an impulse, multi 1-2, or a diagonal, with high probabilities. But with this move up, we cannot do that. We can't count an impulse here because of the overlap. We cannot count a high probability multi 1-2 here, like a 1-2, 1-2, 1-2, right? This wave 1 much longer than the first wave 1 over here, right? That's not preferred. This wave 2 is immense in time compared to your wave 1. It's also not great, so it just doesn't look good. And if you consider a diagonal, then this is going to be your diagonal, which is expanding, right? Sure, we can of course do this, but now that price moved up and then down again, and it's too early to talk contracting diagonals. Preferably one would wait for a wave 4 here to be finished, and then cool, we can consider that diagonal. At the moment with the price action we have, expanding diagonal, it is an option, it's valid, it doesn't have any per se invalidations. The issue is that an expanding structure is very rare, expanding diagonals are very rare, they're never preferred unless all the other stuff starts failing. So therefore, corrective structures have higher probabilities, but corrective structures have a directional bias that is bearish as you're looking for price to take out the low. So because of the local price action here, the probabilities are higher that this is corrective, increasing probabilities to take out the low, either finish WXY and you continue down, or you create a bit of a larger ranging structure, preferably not taking out this low, at least not with a double zigzag WXY, to avoid the risk of moving to the 618 for the bulls. Okay. And then we get to the 15-minute time frame. So on the 15-minute time frame, we can again use my trend and turn methodology. I'm also considering, by the way, K theory instead of K waves. So thanks for all the comments on the names, K waves, Elliott Wave simplified. I saw Elliott waves or something, Elliott waves. Like really fun to see the comments. So thank you. I should do a vote soon on what to pick, but. K theory or Kuhn's theory is also still an option. But here we have the trend and turn methodology. So again, you have the overlapping beginning, 5 down, and you get like 5 down, 3 up, and then another leg down, and again 3. So it's like overlapping. Then price increases in speed with increasing volume as well over here. And then you can see price is slowing down. Volume is decreasing. The range is getting larger again. So from a impulsive point of view, you're working on your wave 4s and 5s, but your directional bias is slowly going to change. You're now looking for, preferably, a bit of a bounce towards the upside. When entering shorts at resistance, you generally like to end in your 1-2 area, or of course at areas of resistance. You ride the 3 towards the downside, and once you start moving in 4-5s, preferably that's a bit of an exit area, and one starts to look for price to create a bounce or create a bit of a, there's some support here, create a bit of a leg up. At least touching the 382 would be a minimum target for a move to the upside. If you currently here it's 110. If you move to the weekly point of control, it's 109.7. And if you move to the value area lows, the white boxes that I have here, then it's at least 109.5 or 108.9, but it's still above where price is at this moment in time. So currently, this range here is very shallow. Probabilities would be higher that this is wave 4-5 price action if we look for an impulse to the downside, which means the bias is going to be towards the upside. It's slowly turning, right? It's slowly turning. You create a bit of a bottom here, and then you turn. Keep an eye on areas of support. Always interesting, of course. Observe the reaction according to your own plan. Know what you're looking for. Know your entry triggers, your entry requirements, and then there might be an opportunity for you. And if there's not, then there's not. No? So this is the 50-minute time frame. In other words, basically I'm looking for a move towards the upside, a bit of a bounce into some areas of resistance, which includes the fib, but also an order block that we have here between 110.1 and 111, as well as a daily at 110.568 here on my chart. Okay. Beautiful. Of course, if price continues, it continues. I mean, on the 4-hour time frame, the probabilities are the way they are at the moment for another low. But on the 15-minute, it would be interesting to look for another bounce. If this bounce to the upside is corrective, then we're going to be looking for larger continuation down, or you're going to get like larger corrective structures. So that's the bias. Anyway, news. So today is the 22nd of October. Tomorrow there's some news. I don't expect much. On Friday, I would expect more volatility, 2:30 p.m. Central European time. So it's interesting. When looking at the levels, these are my volume-related levels here on my chart. Feel free to copy if you want to. Volume levels are my favorites. Here are 2 white boxes. Those are value area lows of this range, depending on the pool. So the one is 106.5, 106.6. The other one is 105.7, 105.8. Just worth knowing, I suppose. Time frame horizontals. There you go. And then the order box, 2-day order block up here. I wouldn't be surprised to still see price at least move to 121 at some point. It's a great area of resistance as well, filling this gap. There's multiple levels over here in this area as well. But at the moment, the probabilities are the way they are, and then based on new information, we'll figure out new probabilities as new information comes. It's also about directional bias in the end. But at the moment, as it stands on a weekly and a daily, probability is higher for the bulls than the bears. Reason being that in a bear scenario, you need a 1, 2, 3, 4, 5 to finish at the low. You're working on a 2 up and a 3 down. Lower probabilities because you need to either count a single 2 or allow for truncations on most of the charts of exchanges, and that is not preferred. So the bulls still preferably have higher probabilities based on Elliott Wave analysis. On the 4-hour time frame, probabilities are higher for another low. Reason being that probabilities are higher, this is corrective. So the 1 hour supports basically the narrative. Probabilities are higher, this is corrective at the moment, increasing probabilities for another low. Of course, we are aware that probabilities may change if price here locally is going to move towards the upside and is going to be an impulsive move up. Oh, maybe we have to reconsider something. But at the moment, we don't have that information, and it doesn't have the highest probabilities. Probabilities arguably are higher. You're going to get a move up, get a corrective move, move down, get a corrective move to the upside, and then either look for a larger range like a flat triangle, maybe even a double zigzag later, but and then eventually trickle down. So 4-hour time frame, not a low. 1 hour time frame, higher probabilities, it's corrective. 15-minute time frame over here, probabilities are high to look for a bounce to the upside and at least reaching the 382. Keep an eye on areas of support as well. On the number 2 spot, it's just this. That's lower probabilities. Probabilities are lower. Price just continues in a straight line without at least at some point getting a bit of a move up to touch the 0.382 Fibonacci that you then take from the high to wherever the low is going to be formed. At the moment, it is there. So that is it. Hopefully you find this video helpful or valuable. On the left side, you can see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.